Hello and welcome back to goldstocktrades.com. Today we have with us Greg Johnson. Greg is CEO of Prophecy Platinum. Prophecy can be traded as NKL on the venture, and it also can be traded as PNIKF on the OTCQX. Thanks, Greg, for being here with us today.
Thanks. It's a pleasure to be back.
Greg, we're seeing platinum climb on Zimbabwe supply fears. Could you update my readers on this topic?
Yeah, there was, pretty recent news here that this trend towards resource nationalism that we've been seeing, across the sector in a variety of these smaller third world countries is now starting to really show itself in the platinum space as well. Jeb, as you know, that 92% of our platinum supply comes from South Africa, Russia, and Zimbabwe. Zimbabwe was one of the few areas of growth, but I believe just the middle of February, there was a news announcement that Zimbabwe had basically nationalized the assets of Zimplats. Potentially, certainly clamping down on any growth from that area, and that'll be a significant deterrent to other companies looking in that country to develop new sources of production.
Greg, let's talk about the undervaluation of the platinum group metals compared to gold. Not only are we seeing it with the metal, but we're also seeing it with the developing miners. Could you address that?
Yeah, if you take a look at any of the precious metals companies, whether you're looking in gold or silver or platinum, there's a pretty typical advancement as a company moves from early development stage, where you're developing a resource and working on your first engineering, through advanced development, say feasibility stage. This is the point where a project is ready for a bank to finance it or investors to finance it, and into production. And we would typically see that the valuation of a producing company in the sector more or less reflects kind of profit margin per ounce and some kind of discounting factor. But the market more or less gives those producers value for their profitability on their ounces of production. As you look at an advanced development stage company, typically it would be a discount to that value that you'd be in production. And when you look at an early development stage, accordingly, as it's earlier stage and there's more risk and more hurdles that you need to get through, it's earlier still. When we look at that pattern for platinum, it's the same overall pattern as we see in gold and silver, but it's interesting that the valuations, particularly at the earlier stage, are even more compressed than we see. For instance, today, the average producer in the platinum space for the two North American producing companies, Stillwater and North American Palladium, averages $165. That's enterprise value per ounce of resource that the companies carry. The advanced developers are trading at around $30 an ounce, and the early development stage are trading around $3 an ounce. Now, if we were looking, Jeb, at gold in the same kind of analysis, you'd probably see most producers in the gold space trading $150 to $400 or even $500 an ounce for metal that's the same value. You'd be looking at the advanced developers would probably be twice what the valuation currently is for the advanced developers in platinum, $75 or $100 an ounce. And early development stage would typically be at least, in the $10 to $25 an ounce range. So, it's quite an attractive valuation compression right now in the platinum space, maybe because it's a smaller space, maybe there's less awareness of these companies, but it certainly is something that I would expect long term would probably, because the metals are similar value, or even platinum is now above gold recently, we may be seeing something that's an opportunity for investors just to participate in that revaluation.
Greg, we're dealing with a tough junior mining market and financing market for junior miners. I know you have a lot of experience raising capital for the previous companies that you worked for, but we also see with platinum this tough supply dynamics coming out from the rise of resource nationalism, and there's not a lot of supply out there. So can you talk a little bit about the financing environment?
Yeah, I think there's a number of things that give us, a leg up, if you will, on financing access for Prophecy Platinum. One of the things is our team, for previous companies, has been successful at raising capital even in these difficult market times. One of the ways we've been successful at that is recognizing alternative markets where there still is capital available and attracting those investors to the companies. I've raised about $50 million over the last year or two in these difficult markets for other similar companies by going at a combination of your traditional investor markets as well as alternative investment markets such as Asia. The other thing I think is because the fundamentals are so strong for platinum right now, with so little production in first world jurisdictions like our project in the Yukon, that it really makes Prophecy Platinum stand out. And if we were another gold company with a similar asset in gold competing against hundreds of other junior companies, it probably makes it a lot more difficult proposition. With our asset located where it is in the Yukon, the fact that it's already 7 million ounces in platinum metals in the ground, which makes it world-class in scale, has the benefit of good infrastructure. I think this is a story that is likely to see good investor interest, and it's going to allow us to raise the kind of capital that we need to advance the project in a timely manner. To give you an example, Jeb, the Platinum Group Metals company about 2 or 3 months ago raised about $180 million, which is a huge financing in our sector. And that company has gone up about 50% in value over the last couple of months. So it's really an unusual success in these challenging markets, and investors that participated in that financing, for instance, are likely to be looking at what's the next new name in platinum that's earlier stage and hasn't yet taken that run. And I think that's a real window of opportunity for us.
Well, let's talk a little bit about your deposit. We know that there's potential exploration upside here. What's developing on the geological efforts?
Well, right now, we put out a very significant news release back earlier in February, which really highlighted the new thinking on the project. We're quite excited. Relative to other projects in the platinum space, we're seeing really amazing widths of the mineralization. We're looking at a system here that's 500 meters or nearly 1,500 feet wide of continuous platinum, nickel, and copper mineralization, and that is really a big system. Many of the deposits down in South Africa, for instance, are only a couple of meters or less than 10 feet wide. And so, this magnitude of mineralization makes it so that this is a system that can use huge scale equipment and be like some of these mega gold mines that we're seeing developed around the world. So our team has been focused on understanding, this new interpretation, understanding the new information that's coming out from the most recent drilling, and putting that into a new predictive geologic model that'll become the basis for our drill program this summer season out in the field in the Yukon, as well as looking at putting out an updated resource estimate for the project. It's quite exciting. Very rarely do you come across a situation where two of the very best drill holes ever drilled on the property with some of the widest thicknesses of mineralization are completely open. There's no drilling to the side of them. And, we have that situation where we stand today with a new model, with two of the best holes ever drilled, and, basically having the system open to further expansion, and we just have to go in and start drilling off on those holes. So it's an exciting time for the company. We're putting the team together. The team's been diving into the geology and the data, working through things, and you'll see us probably starting to move the drills out onto the site in May and start drilling again, starting probably in June of this year. And we would anticipate drilling well into the fall. So it would be a good flow of news for investors. This is going to be some really important targeting that's going to be happening, both in terms of potential to grow the resource, but also in terms of being able to move these ounces into the higher confidence measured and indicated categories, which are the equivalent of proven and probable reserves once you complete a feasibility study. One of the other things I might mention, Jeb, is that we have, the technique of various types of geophysics, which allow us to get indications of where mineralization may occur, and these might be electrical methods or magnetic methods. Recent surveys that we did this last year indicate that we have two different untested targets, one off to the east and one off to the west, which may be as large, at least in terms of their signature geophysically, as our current entire resource. And it's quite exciting to have targets like that are really begging for a drill hole to be put into them. And that'll be another one of our focuses for the program this year, is to test some of those things and understand, what is the extent ultimately of our deposit.
Well, Greg, thanks for being here with us today and for giving us an update on Prophecy Platinum.
Well, really appreciate it. I think this is a very interesting time in the marketplace, Jeb, particularly for investors who are looking at the space. I think the valuations that are being presented right now with this continued consolidation that we've seen since really December 2010, this is one of the longest consolidations we've seen since the 1999 bottom. And I think this is a very interesting time for savvy investors to be taking a look at the space.